Hi, I'm Dustin Gaskey, Thomas Title. Welcome back to our second iteration of Thomas Title's Title Talk. We're here at our Thomas Title headquarters in Scottsdale, Arizona. We are a branch and an arm of the National Commercial Services for Stewart Title, and want to give you an update on Arizona and what we're seeing here in our market. There's been a few darlings that have been kind of continuing to work better than others in the marketplace. Many of us have just returned from Toronto for ULI Product Council meetings, IMN in Miami, or ICSC conference in Las Vegas. And we've been able to see how our peers are reacting to the market, what headwinds they're facing, and put together a culmination of what we're continuing to see work best in our market. Hospitality, data centers, build for rent, medical office buildings kind of seem to be the darlings of our marketplace right now. We're continuing to feel more increase from them, and we're also starting to see some movement in the home builder space. You know, we saw recycled of listings continue to come through for probably the last, I'd say, 3 to 5 months. Really hasn't been much new coming in the marketplace. The home builders really are starting to realize that if they want inventory for 2025, they need to start putting out offers. And so we're seeing offers increase, we're seeing accepted offers, and escrows open on the home building space. It is putting some pressure on the build to rent because they're not the only buyers out there now for this land. We're seeing both for sale and for rent product in that. Continuing to face headwinds in the debt markets as well as the equity markets. It's harder and harder to get that capital out there, and those who are playing well in this space are continuing to gobble up market share when it comes to it. On the industrial side, large closing last week, 1.3 million square feet, and seller on that sits with a great land basis. They own a parcel just north of it. Land basis is similar, but construction costs are coming in about 50% higher than what they were able to build that 1.3 million square feet in. There's definitely spaces such as the debt, the equity, and the construction finance that are continuing to still face challenges for those who are sitting on darling pieces that are sitting just across the street from one another. On the retail side, coming back from ICSC, quick service restaurant, continue to see a huge need in that. I think those that are bothered in are kind of the mom and pops, or those who have tried to enter into it, but those who have been the consummate professionals and continuing to grow their market share, we've seen a large increase. Pretty much every quick service you can imagine. Heard a stat today that by adding drive-thrus to things like Chipotle, we're seeing a 25% increase in margin for those restaurants. So we continue to expect that pad size is going to get larger. Expectation for drive-through and how many units they can put within their drive-through seems to be increasing. So we're seeing 1,800 square foot stores have to continue to move into spaces that are 1.5 acres on up to 2 acres in size to do that. We've also seen a huge increase in our car wash transactions. It continues to be a fight in multiple markets for those who are going to be entering into that space, and just trying to stay ahead of it here on a regular basis. Large multifamily project, one of the largest in Arizona's history, down at Tempe Town Lake. Original land acquisition and construction financing was approved. Carlos Slim out of Mexico was the financing side of it. Great to see what Tempe Town Lake's going to be bringing in. I think that total project's going to be about $2.2 billion once we get moving forward on it. Our team's continuing to track what we're seeing as defaults or potential defaults in the marketplace. We're really not seeing a ton of rumblings. As a company, we were able to open up a large TSG, about 700 million in size, and really staying in front of our legal teams, special servicers, our asset managers, our broker networks, just to see where we anticipate that to go forward through the remaining balance of 23 and 2024. On the industrial side, we're really seeing the spec assets really come to a pause over the last few months. I think I mentioned this last title talk. A lot of that continues to be where your land basis was and what we're seeing in construction costs. Although we're seeing construction costs come down in retail, we're seeing some adjustment for it in build for rent and in multifamily. On the industrial side, we're still seeing construction costs upwards of 35 to 50% higher than it was 18 months ago. So that continues to face a lot of pressure for getting these million plus square foot properties that are institutional grade to move forward. Specifically on the 303 corridor, we're seeing a lot of activity, at least conversational activity, but in terms of action and activity of getting them done, they've definitely come to a pause in that space. Today at our Thomas Title headquarters, we were able to hold our economic symposium luncheon. We invite somewhere between 12 and 14 of the top specialists within their asset classes, bring them into a room and just talk about the headwinds we're all facing. It's a very confidential conversation. We're able to sit down, learn from one another, understand the challenges we're facing, and also the opportunities. It's a day we enter in there, positive, grum. Everybody comes a little different, but everybody leaves with incredible insight, incredible networking, and opportunities. If this is something you guys would find valuable, we'd love to consider hosting you at our next one, and see if you can't sit around a table with your peers and find the value that all those that were there today were able to.